Question. How can good housing market numbers actually be a bad sign for the economy? We've crunched the numbers and took a hard look at exactly what the latest report and recent trends in the housing market really mean. We're going to tackle a couple of very important points here today. What does a recent change in inventories mean? Could recent good news actually be a bad sign for the future? Why is there such a divergence between new homes and existing homes for sale? Now, this last point is actually very important. The existing home sales is a measure of the transaction volume of the existing single family homes. Existing home sales rose to a 4 million pace in January. That marks the best level going back to August of last year. On the surface, this is good. Amazingly, analysts are really touting this as a big win. But as always, there are many sides to the study of economics. What does this mean? Well, more homes are now being sold than in the past 4 months. Existing home sales, the housing inventory, reflects the number of properties marked as active on the market. When a seller lists a property, it becomes part of the inventory. Now, current records indicate there's a little over 1 million homes in inventory right now waiting to be sold. Now, that's far less than the 1.15 million highs achieved October of last year. We can interpret the low inventories as either positive or a negative. Are there low inventories because of red hot demand? Is everybody just scooping up these homes for sale? Or is there a low inventory because the sellers are not motivated? They really don't want to sell. What does this mean? Existing home sales inventory is declining. True, it did uptick in the past month, but over the past few months, it's down a lot. Also, it's important to note specifically existing inventory. In just a moment, we're going to tell you why that in particular is so important. Existing home sale supply indicates a number of months it would take to sell a home at current pace in the inventory. At the current rate, it would take 3 months to sell all the existing homes in inventory. We can see that the inventory has declined quite a bit, and the monthly supply figure stood at 4 months in October of last year. What does this mean? Essentially, that we're looking at two different numbers. They're both showing that inventory is ticking up for the moment, but declining over the long term. The new home supply ratio indicates a number of homes for sale versus a number of homes sold in a given month. Now, again, this is new homes. That figure currently sits at an 8 months. Given the current pace of sales, it would take 8 months to sell all the new homes in current inventory. That represents a decline in inventory from the prior month with a reading of 9. What does this mean? The ratio of new homes for sale versus those sold is also declining. Interesting to note, at the current rate of sales, we have an 8 month supply of new homes and only a 3 month supply of existing homes. Why do you suppose that is? We have a theory. Let's take a moment to think about it, and then I'll give you my opinion at the end of the video. Again, why is there an 8 month supply of new homes and a 3 month supply of existing homes? Now, putting this in context, let's take a look at how this figure changed in 2007, 2008, when the monthly supply steadily increased. In September of '09, the monthly supply stood at 9.2 months. Again, it would take only 9 months or so to sell all the existing homes in the inventory at that time. By October of '08, that figure rose to 12. In other words, as the economy deteriorated, the supply increased. More people put their homes on the market but were not able to sell. Also, notice how the inventory increased even while interest rates declined. It would make sense that lower rates would bring home buyers back to the housing market, right? But not if the economy's in trouble. What does this all mean? Is that good or bad? To complete the picture, we're now going to consider the median sales price of existing homes. I think this is really going to give us the answer, whether all this news is good or bad. The median sales price of existing homes currently sits at 379,000. This represents a significant decline from the peaks of June 23. That was just over a little over 400,000. What does that mean? Well, let's put all of it together. Velocity of sales is starting to increase, meaning there's more homes being sold. The inventory is declining, so we're selling more, inventory is declining. That sounds good. The monthly supply of existing homes is falling, meaning we're selling so much that the supply of homes is going down. And the ratio of new homes for sale versus homes sold is also falling. But home prices are also falling. See, when home prices are falling, it means that there's more sellers rushing to the market faster than buyers can jump in. Well, if more sellers, I should say, are rushing to the market, why is the inventory declining? Because it's not really a matter of the sellers rushing to the market. In fact, especially existing homes, the sellers are not rushing to the markets. Remember our question. Why do we have an 8-month supply of new homes and a 3-month supply of existing homes? We have a smaller supply of existing homes because who sells new homes? Home builders. They build a house and they want to sell it. Who sells existing homes? Homeowners. Why are there less homeowners than home builders coming to the market? The homeowners don't want to come to the market. Why is that? Something called the lock-in effect. It's where homeowners choose not to sell due to high interest rates. You see, when we own a house, we say, okay, we're going to sell our house and we want to buy something else. We say, wait a second, I don't want to buy something else. If I buy something else, I'm going to buy something with a very high mortgage because interest rates right now are very high. That's why the existing homes are not being sold. That's why there's a smaller inventory because the home builders are building homes and then that goes in the inventory. That's why there's so much more of a supply. That's why there's 8 months of supply of new homes and only 3 months of supply of existing homes because of the lock-in effect, because the existing homeowners don't want to roll themselves into a higher mortgage. Well, we've written all about this in our Substack newsletter, substack.com. Very simply enter our information as follows and it'll bring you to this and all of our other publications. Now, very recently, we just published Predicting the Next Recession, Learning from the Past, and that's a really interesting read. Got a lot of great feedback about that. But prior to that, we wrote about the lock-in effect, and it describes exactly the dynamic in the housing market where existing homeowners do not want to sell because they don't want to roll themselves into a new higher mortgage because of high interest rates. We discuss exactly this phenomenon, and now we see the evidence of it in the latest numbers that the existing homes, the inventory, 3 months, new homes, the inventory, 8 months. It's the same buyers. The difference is the sellers are not motivated when they're going to roll themselves into a higher mortgage. The home builders don't have that problem. They build homes and they sell homes. So it's a very interesting read. It's here at Just the Data in our Substack newsletter. We'll provide you a link for that as well at the end of this video. We hope this has been helpful. We look forward to seeing you back soon.